What's going on, family? I wanted to start this Sunday off by pouring into you in a way that you may not have been poured into today. And I want to tell you that I believe that you have what it takes to retire early. There are many people we see in our lives in generations past that have never retired, that ended up working, stacking shelves in Walmart, in Target, in the grocery stores, ended up working in libraries in old age. And there's nothing wrong with that. And it's not because they want to, it's because they had to supplement their income. But I'm telling you this, if you do what you need to do now, you do not have to take that path, but you could choose to take that path. And that's the power of financial freedom. It's the power of choice, the power to say, I want to go to the beach. I want to go and work in a library. I want to go and garden. I want to do the things that I want to do and not have to suffer in my retirement age because I didn't do what I needed to do before. And then I'm telling you this, you don't have to get old and gray to retire and watch your hair start to deteriorate and your teeth start to fall out of your face. You could do it way earlier than that. So I'm pouring into you today and telling you that you have what it takes to retire early. Remember, investing carries risk. Talk to a licensed financial advisor in your area and let's get right into it. The first banger I want to speak on actually has their earnings coming up, and this is Adobe. Adobe is an online tech company which many people use to enhance the audio on their videos. Many people use in relation to podcasts. You might use Adobe and edit things online like images, but let's look at them as a company and not just think about the consumer side, which is what people always want us to do. So Adobe, they're estimated to make $5.9 billion this quarter, and we want to see if they could hit that mark. Let's go and look at the current price of Adobe and then compare it to what analysts are thinking it could go to. Adobe at the time of this recording is currently $349.50. When you look on the Moomoo app, which I always encourage you to go and download, if you heard me say it and you didn't do it yet, then I'm telling you, today is the day that you answer the call. Put $100 on there, get the free stocks, but get access to all of the tools, family. It's going to be huge. And that 8.1% interest on your uninvested cash, that's the best interest rate going right now. Let's look at what the ratings believe that the fair value is, because I really need you to have access to this tool, versus what the analysts are saying it's going to be. The fair value is looking at the fundamentals of the company, what they earn and what they should be valued at. The analysts are telling you where they think it's going to go. So the analysts are saying they think it's going to go to about 474. Family, that's a really nice move. Many people see that the stock is in the 300s and they think it already ran. But if it's in the 300s and analysts think it's going to go to 470, that's like having a $30 stock go almost to $50. But then the fundamental value, they're saying, is closer to almost even 600 at this $560 level. And then their PE, price to earnings ratio, when we look at the fundamentals, which tells us how to compare apples to apples when you're looking at certain companies, it's near an all-time low. So they're being sold off like crazy. The PE is at 22. And for a tech stock like this, generally, if you could get it at 30, that's good, but they live generally between 30 and 40. So this one is way cheaper compared to their peers, which gives it more of a chance to run. And speaking of their peers, let's look at that tool. The peers of this stock have an average PE of about 37. So then this means we're getting a deal closer to 22 as long as they hitting these marks that they're supposed to hit. And we're going to see that after the market this week. And then when you look at the price to sales, meaning you look at the price of the stock compared to how much money they actually bringing in, you see that their peers have a 7.2 and then they have a lower, even more affordable one at 6.5. So it's looking undervalued. Why do you want a stock that's undervalued? Because you want to get it when it's low and then you want to sell it when it's high. But this is a current kind of company that a lot of people can actually hold on to long term as long as they hitting their marks. This ain't just like a get in and get out kind of a stock. You still have to watch it because there have been times where they haven't been hitting the mark. This is not like a Microsoft, but it's also not like a hype stock. This is actually right in the middle, and this is their chance in these upcoming earnings to show us if they have what it takes to really graduate to being a set it and forget it kind of a stock. But I'm telling you, keep your eye on it. Here are some levels I want you to pay attention to. The lowest one is at the bottom of a technical band. The band is called the Bollinger Band, and the low point is about 338. You want to see if it goes under there? We really like it under there. But where it is right now at about 349, I ain't mad at you if you buy some shares of this. And then the high point where it has some resistance is when it gets up to that 357, your 360s. We want to see if it could break past those, because then it'll be headed towards those price targets and fair value. Where the institutions have been buying this one have been about $343. So like I said, if you get a little bit lower than them, that's generally better. I want you to do the technicals on it yourself, but I'm giving you the tools that you need to be able to do this right. I was paying attention to what the institutions were doing, and I circled this right in red, so I ain't got to hit you in your head. The hedge funds, the asset managers, they were selling out of this one in the last quarter and a few quarters before, but they slowed up. If you see this orange bar on the bottom, that was a lot of selling, but you notice the selling is kind of drying up a little bit. So Wall Street might start to actually pivot into actually acquiring more of this. And why is that? Because when you look at the earnings, we can see that the orange line is telling you what they think they're going to get, and the blue line is what they actually got. So they've been beating earnings again and again and again, going from about 5.5 billion all the way on the left to the right side estimate all the way to about 6 billion. So they imagine that they're going to increase their revenue within 1 year by over 500 million in a single quarter. You gotta pay attention to this one coming up. I spoke to this one in KGU, and I encourage you to join the team if you have not done so already and get my trades. The link is in the top of the description. And I want you to understand that Robinhood, the app, has actually gotten into the S&P 500. We was running plays in there, and I had this on everybody's radar. So then I'm encouraging you to join and actually invest into yourself. If you ain't spending money investing into your mind and what you know in the circles that you in, then I want to encourage you to do it today. So Robinhood, they are about 107 at the time of this recording, but they was all the way down in the 90s. They even dropped down to 95, and now they got included into the S&P 500, aka the basket of set it and forget it stocks in general. So this is a new level up for them. So they're very likely to be bought more often than other times that they were bought in the past. Now the hedge funds, the institutions, they're going to be more likely to buy this in the S&P 500 ETFs that they are managing. I want you to do this specifically. Watch out for the $109 level. If you see us closing out above this 109 level, what you're going to do is you're going to look to see if the day close and we over 109, or even if a 4-hour candle closes and we over that 109, one or the other. This is what you're going to look at. You're going to go to Robinhood, January 16th, 2026, buy a call, and we're going to look at the 110 call for January 16th, 2026. Why are we going to do that? Because this thing is going to have the most likely chance to run like crazy if we stay over this 109 level now that we in the S&P 500. But if Robinhood decides to come back down into the 90s, then this is going to give us an even better launch as it's heading off towards the 120s long term. Family, another one I want to put on your radar is SoFi, and this one, we've been killing it with this one time and time again when it was in the single digits and so on. This one is one you got to watch out for too. Keep that one on your radar. I love y'all. I appreciate y'all. Like I said, you deserve to retire early, and you're going to do what it takes, family. I love y'all. Use the Moomoo link in the top of the description to get some free stocks and get up on the best trading app that exists. Join KGU and invest into yourself, family. The links for that is in the top of the description. You hear the call, receive it. I love y'all, and I see you in the next one. Take care.